Michael, let's start with what happened. We had a flare-up, to say the least, of Middle East tensions. We had, of course, the killing of an Iranian general. We had, millions in the streets mourning him. Then we had a retaliation from the Iranians to Iraq, targeting U.S. Forces. What's interesting about all of this is that, I saw a headline saying the markets are oddly subdued. We saw futures sell off and then bounce back up. Why do you think we're seeing that kind of reaction in the markets?
I think the consensus reaction, which I would agree with, is that neither side wants a hot war. And that was the fear last night, that Americans had died, there would be a response, and this would escalate quickly. And I think what's been found is that this was very much a symbolic retaliation for what happened last week. No Americans or Iraqis were killed. And it feels like the situation is de-escalating a little bit, which is giving some calm to the market. Futures have swung quite rapidly. They were down 1.5% last night. They're actually up now. And I think that being higher reflects a somewhat, albeit short term, a reduced risk premium in the Middle East as both sides step down somewhat and reassess where they're at.
So from a market perspective, again, does geopolitical risk rise to the top from you just, again, look at the markets, or is it something that is just one of many things you're looking at? Or maybe another way of asking this is just what matters? What are you watching right now for markets?
So the geopolitical backdrop globally has been poor for some time, continues to be not great. I don't think this changes anything, to be quite frank. And so I don't think this is, it's always going to be headline driving and it might drive some degree of volatility. I don't think this is really what matters for equity investors or bond investors at the moment.
So what does?
So a few things. One, we have very easy policy right now. Monetary conditions are quite stimulative. Two, growth is starting to reaccelerate. We've been in a bit of a growth slowdown for 2 years now. That's coming to an end. And three, we're starting to see governments around the world really step back from fiscal austerity and seeing more money being spent by governments. Long term, it's unclear whether this is a good thing or a bad thing, depending on where they spend it and how they invest it. Short term, very supportive for equity markets.
Yeah, I was going to say, despite all this, I'm hearing hints of optimism for the markets right now.
Yeah, we've been quite sanguine towards markets for now, call it 13 months, continue to be so. Believe there's a lot of opportunity, and particularly the equity space this year, as we see these forces at play, really lining us up to be much more bullish on risk.
Michael, thank you.
Thank you for having me.